Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video, we're going to talk about why house prices aren't dropping everywhere in the country, where things are going down, what's happening and what that means for us as property investors and homeowners alike. Now, before we jump into this content, thank you everyone that's been watching the channel. It keeps going up every single day. We have been having 60,000 viewers on the channel. Now we've just hit 70,000 viewers in a month. We've got 6,000 subscribers and nearly 600,000 views in total, which is absolutely bonkers. So join us on that journey together by smashing that subscribe button and hitting the bell notification. And while you're here as well, smash the like button, guys. Go on, absolutely destroy the like button over there. That really helps with the YouTube algorithm and will help us get more views on the channel moving forward. So thank you very much. So Zoopla have done an article. Now, I want to make sure that you really understand this because some of the comments, I don't think people watch the video. They look at the comment, they look at the title, and then they jump into the comments all angry. He's saying house prices are going up. He's saying house prices are going down. This is Zoopla's data, right? So this is the new update from Zoopla today. And Zoopla is saying that the UK property market, including Northern Ireland, is worth around £10 trillion, which is pretty crazy, right? Now, to put that into perspective, London is a huge chunk of that at 20%, and 2 trillion in property is based in the London area. Now, to just give you an idea on how big London is, if you add it up, the Midlands, Scotland, Wales, and Northern Ireland, imagine that, all of Scotland, all of Wales, all of Northern Ireland, and the Midlands, which is like the second biggest area, then that is the same as London. Bonkers, right? Absolutely bonkers. So London has been massively hit so far. And we did a video the other day. I'm just looking for a marker, lost it. We did a video the other day, and what we saw on that was that London is already in a property crash in certain areas. So mostly the very expensive areas. So Kensington and Chelsea are already crashing. One was down 12%, one was down 15%. Now, as we discussed, a lot of that is due to external buyers. So in those areas, you get a lot of foreign investment. People from China like to invest in central London and other countries as well. It was always seen as a safe haven. However, those places have their own difficulties at the moment. The Chinese have their own property crisis. Worse than ours, they've got whole cities, actually whole cities that are empty. You can see that on YouTube. It's bonkers what that looks like. And the pound has got stronger. It's not massively strong at the moment, but it's a lot stronger than it was at the end of the year. And so that means that it's a lot more expensive to buy in London, right? So that's why prices are crashing there. Now, around the UK, we're not seeing the same. So what the Halifax and the Nationwide have said is that both of those lenders have said the market is down. One says 2.5%, and I think the other one is 3.6%, 3.7%, somewhere thereabouts. So on an annual basis, on a rolling annual basis, both of those big lenders are saying prices are down. However, the majority of that is from the London data, because London's the place that's been hit hard. You've got a little pocket in Edinburgh that's been hit hard as well. So what is the rest of the UK doing, and where does that sit at the moment? Well, 66% of houses in the UK, let's put something on the board so we can remember, that's a 66% of houses have got a 1% annual rise at the moment. So not everyone is being hit hard. The next places that they're expecting to go and get hit very hard, which is somewhere where I own property, is the coastal regions in the south of the UK. Now, during the pandemic, they absolutely shot up. Hastings was one of the biggest gains in my portfolio. So I've got properties in Dorking is the bulk of my property, Hastings, Doncaster, and one in London as well. And so that's interesting to know that Hastings is going to be for the chop, and those are where we're seeing big reductions coming in now, and they're not sold yet, but eventually that data will lead into the data and by the end of this year or early next year, it takes about 6 months to sell a house, doesn't it? These are the areas that now we're starting to see a bit more of a downward trend. So what else is going on? Well, basically, this will feed from London. So most things start first in London. Obviously, it's the capital of the country, and then it will start creeping out. And the expectation is, of all the areas that are going to get hit hardest, the southeast is probably going to be one of the toughest hit areas. And that's where the bulk of my portfolio is. And that's fine, because I'm fortunate enough that I bought so long ago that I've got only 40% mortgages. I thought it was 50, but I do an analysis every few months. I've got 40% borrowing on that. So it's not ideal. I'd rather my houses didn't go up, didn't go down even, but will be okay. And so in this area, in the southeast, it is going to be tough for investors for quite a while. So buy-to-let projects, flip projects, those sorts of things where you don't have a lot of margin, or if you're doing a flip and you've got all these costs and then you're relying on someone buying it at the end of it, that's a risky business at the moment. If you were going to do a flip and it was going to take 12 months, what do you do? Because you don't know definitely where the interest rates could be at that period of time. And so it's good to exercise some caution and just really understand what's going on. Now, we've said this in a few videos. You know the Conservatives are up for a general election pretty soon. And so they have a short window of time where they will want to stop a property crash. Because if inflation's still high, the property market is crashing, interest rates are through the roof, we've still got an energy crisis, I don't see how there's any possibility that they could get voted back in. Very, very unlikely. So they will be pulling lots of levers, looking at different options. We talked about yesterday, I did a video where there are 50 Conservative MPs now, and that's a growing number, that are talking about abolishing stamp duty for personal properties. So it wouldn't impact buy-to-let investors, but it would impact buy-to-let investors. So how it would impact a buy-to-let investor is that other people's property prices would probably go up a little bit, or just not drop as much. And that's interesting to follow what happens with that. So I'm going to be keeping an eye on that and see if that starts going to 100 MPs and 150 MPs. Who knows? It's getting some momentum behind it, and they're going to be looking to do whatever they can to keep this market high. But if they don't collect stamp duty, it's one of the biggest taxes that there is. In fact, I would hedge that a lot of you guys that buy a residential property, that the stamp duty amount is maybe considerably more than you pay in income tax in that year. So that's a lot of cash that they would need to find from other sources. So who knows what's going to happen with that. But it's interesting to see. So that in summarizing this video, London is going on a downward trajectory. Now there's some data coming out. Zoopla are saying that the south coast is looking like it's the next place to turn, and that's purely based off the fact that a lot of people wanting to move out of London or have second homes there. Not so much interest in that in this kind of market. A lot of people have got a wait and see approach, so those prices could be the next area to go down. What can you do? Well, you can just make sure that you protect yourself, get a good interest rate, get your deal sorted early. Don't wait 6 months when you can change deals today. You can do it 6 months ahead of time. Call your lender and see what options they've got. Look at going interest only for a short period of time and save that money as a buffer zone in your bank. There's tons of things you can do. Protect yourself, be careful out there, and we'll go and make another video very soon and see how this is all going. Let me know your thoughts on this. Do comment below. What do you think? Where do you think the next place is that you'll see a property downturn? Do like the video, subscribe to the channel, and check out this video right here.